Hi, I'm Pop Amanity. I made a video to analyze companies in detail. It's lacking a lot, but I will continue to improve, and if you tell us any mistakes or suggestions, and please subscribe and like too. The first company is Tesla. If you look at the annual sales, it will not be until 2020 that the operating profit will turn into a surplus. Developing car designs, batteries, and parts directly cost a lot of money in the beginning, but in the long run, it played a big role in cost reduction. With the release of the Model S in 2012, sales and profitability will improve significantly in 2013. However, from 2014, as the demand for automobiles decreased due to the fall in oil prices, the performance was down again. Model 3 came out in 2017, and in 2018, sales and operating profit improved again as Model 3 production stabilized and sales volume increased. With the Shanghai Gigafactory coming into operation in 2020, annual operating profit will be in the black. Since then, the Berlin, Texas Gigafactory has been put into operation, and performance has improved. Operating profit is also improving, but the profit margin is also improving due to continuous cost reduction and increased production. Let's look at quarterly sales. Since 2020, sales and business profit rate have improved, but in the second quarter of 2022, sales will slow down for a while due to inflation and Chinese corona containment. In Q1 23, sales were down 4% and profit margins were down 5% from Q4 22. First of all, the 5% reduction in cost of sales is big. Competition among electric vehicle manufacturers intensified, and production increased, but as sales growth slowed, inventory increased and prices were lowered. So, in terms of cost, the cost share increased by 5% from the fourth quarter of 2022. In addition to lowering prices, it is said that the rise in raw materials also has a big impact. As a result, both sales and EPS fell slightly below market expectations. If you look at the cost, it is increasing significantly every year. Compared to 2021, R&D expenses increased by 18.5% and general administrative expenses decreased by 13%. Quarterly, R&D costs in the first quarter of 2023 decreased by 10% compared to the first quarter of 2022, but last year, additional costs were incurred due to pre-production at Gigafactory, Texas, and production at Gigafactory Berlin. If you look at production and deliveries, the numbers are increasing every year. Of these, Model 3 and Model Y account for more than 90%. Model 3 and Y are sold at low prices, while Models S and X are small, but they are sold at high prices to maximize profitability. Quarterly, production and deliveries are increasing, except when the Shanghai plant was not operational due to the Chinese corona blockade. In the second quarter of 2022, it is largely divided into vehicle sales, energy generation, and energy storage, but sales of both vehicles and energy are increasing on an annual basis. The automobile division's profit rate has been increasing since the Shanghai plant went into operation since 2020, and the energy sector's profitability was good until 2019, but it declined from 2020 and rebounded in 22. The reason for this is that costs have increased from 2020 as we increased megapacks, which are more improved than the flagship energy storage product PowerPack, and some costs were added as production was temporarily suspended at Gigafactory, New York, in the first half of 2020. However, sales volume increased and cost reduction added, so 22 years turned into a profit. Margins and sales in the energy storage sector were higher, and the first quarter of 2023 achieved the highest gross profit in the quarter. Quarterly, there are fluctuations, but overall, both automobiles and energy are on an upward trend. As for the profit rate, the energy sector improved significantly in the second quarter of 2022. According to the data, profitability improved due to an increase in Powerwall installation and a rise in solar power unit prices. Looking at sales by region, the United States has the largest sales, followed by China and others. China accounts for about 25% of sales. I think we can understand why Elon Musk visited China, even in the midst of the US-China conflict. Quarterly, in the first quarter of 2023, The United States and other sales decreased, but China increased from the fourth quarter. Now let's look at the main indicators related to energy. Charging stations and energy storage are increasing every quarter of every year. Solar energy is on the rise until 2021, but 22 is somewhat stagnant. While Tesla is increasing its market share by installing superchargers, it has recently received great attention as Ford and GM announced that they would follow Tesla's charging system. Since these three companies alone account for 70% of electric vehicles in the U.S., stock prices have skyrocketed on the belief that Tesla's superchargers will become standard. Stellantis, a merger between Chrysler of the United States and PSA Group of France, is also considering adopting the Tesla charging system. It can be seen that the increase in energy storage was also very large in the first quarter of 2023, and it is said that the production of megapacks increased significantly as the megafactory in California went into full operation. Let's take a look at our financial situation. As of the first quarter of 2023, 50% of Tesla's total assets are current assets, and 50% are non-current assets. 36% of current assets are cash assets, 34% are inventories, and 58% of non-current assets are tangible assets. Tangible assets refer to facilities, land, and buildings, with facilities vehicles accounting for the largest share, at 40%, followed by land, buildings, and assets under construction. The assets under construction are related to the construction of Gigafactory, Texas, and Berlin. Since it is a manufacturing industry, it will of course require a lot of factories and facilities, and depreciation will be high as well. Looking at the annual trend, equity, cash and debt are all increasing, but the debt ratio is decreasing. Tesla went to the brink of bankruptcy due to lack of funds in the early days, but each time it miraculously received investment money and was resurrected. It has overcome many difficulties and has now become a company with high sales and profitability. The debt ratio is also decreasing in the first quarter of 2023, but profitability is decreasing. So I wonder if it is trying to reduce interest expenses. Let's look at current ratio. Current ratio is the ratio of current assets to current liabilities. Current assets are assets that can be converted into cash within 1 year, and current liabilities are liabilities that must be repaid within 1 year. However, inventory is also included in current assets, so you need to pay attention to figures other than inventory. Even if the current ratio is less than 200%, current assets excluding inventory must be greater than current liabilities. Tesla's current ratio is 153% in 2022, which is slightly larger than current liabilities if inventory is excluded from current assets. It looks like you are in a tight financial situation. Quarterly, current ratio has been getting better since the first quarter of 2022. As will come later, Tesla has a lot of surplus cash, so I think it is being maintained even in its current state. This is cash flow. In terms of cash flow, FCF, free cash flow, is the most important. If cash comes in through sales, and there is money left, after investing in intangible assets, you can grow the company without debt. The FCF formula I wrote is operating cash flow, investment in tangible and intangible assets. You'll see that from 19 on an annualized basis, cash remains and starts to pile up, and every year, that amount jumps significantly. You can see that it has accumulated more than 9 trillion in 22 years. The most ideal thing is to reinvest the money earned from the business and repay debts, so I think it's good if operating cash increases and investment cash and treasury cash decrease. On a quarterly basis, we generated free cash except for Q1 of 2020, and FCF has been declining since Q3 of 2022, and the first quarter of 2023 is not profitable, but the investment in tangible assets is increasing every quarter. In the first quarter, it invested $2 billion for the expansion of Gigafactory Texas. To reduce battery costs, we are preparing for 680 batteries, which are high-performance batteries. I think we can become more competitive if we produce our own batteries. For reference, the Cybertruck to which this battery will be applied is scheduled to start production at the Texas plant at the end of this year. In addition, supercomputer dojo and autonomous driving seem to be progressing well. This time, Tesla seems to be able to expect more growth as an energy company by attracting Ford and GM to its charging system. In the earnings call, Tesla plans to establish a mega factory next to the Giga factory in Shanghai, with the goal of operating in the second quarter of next year. It took Tesla 10 years to become profitable. During that time, Elon Musk created Tesla today by solving numerous problems, such as financing, production, and yield. Other electric vehicle startups, such as Lucid and Rivian, are also struggling to expand production scale, reduce costs, and secure funding. It would be more helpful if you refer to Tesla's history and invest. We'll see you next time with better content and videos. Thank you so much, and please subscribe and like.